All right, this is Future Speak. This is where we, speak about for 6 different segments of the futures markets. We're going to look at energy, foreign exchange, metals, treasuries, stock index futures, and the grains. So we do have a lot to look at here. Do this normally every single Wednesday. I've done this for 3.5 years. So many of you have watched me out there. And now what we're going to do is look at similar things that we have looked at in the past with about 22, 23 different futures that we're going to look at here. And there's a lot of interesting things. Now, remember, this is a special that's out to everybody out there in the public. This particular segment is going to be in the members area. The new website is still, we'll call it 2 to 3 weeks away right now as we continue to make progress. And I think you'll see a lot of great things on there. So we're going to get into futures review right now. We'll start in the energy market, and here you could see the light crude chart coming up. So always start with these two charts where we're looking at the longer term. On the left, that's the weekly chart, and on the right is the daily chart. And I do cycle analysis on my charts. Essentially, I'm looking for the rhythms in the market of money flow, and it's just kind of rallies or money in, of course, and sell-offs or money out. Here is the light crude weekly chart. We've been in a very, very tight range, and we're getting into an area where there's a what we call a synchronicity of bottoms due. There's a lot of bottoms showing up right in here. Now, this big blue chart right there, that is the RB, and that is RB and heating oil lining up. Sorry, it's this one right over here, and lines up with a period in oil that should be a correction. So oil, gas, and heating oil all pointing to some weakness due to come in here in these next several weeks. So we'll switch over to the daily chart when we look at that. And you can see, well, here you can see the cycles on the bottom. These are a kind of a big cycle and a smaller cycle made up of 3 parts. And this one that we're in right now, a little bit hard to read. This was a 6-day low right over here. This is an 11-day low. Each of those could be accurate. But what's significant to see is that, this is that resistance area. We've been trading in a range between, let's say, 63.5 on the upside, 56.5 on the downside, and we're still stuck in that range right now. We're getting into this area, which is an area that puts a lot of risk in the market, and we're going to call that this period of downside risk. And that's what we're really looking at are the odds when we look at cycles. And right now, the alignment is negative as we're moving into this corrective period. Now, this failure today, it does line up with that kind of thinking. So we're going to look now, switch over for here, and we'll blow this back up. That is the light crude chart, and we're going to look at gasoline /RB, and you'll see something similar in here, that we're in these last couple of weeks where these cycle patterns suggest that it's going to come down, but then you see it looks like it's going to rally again. So there's only this window, we'll call it just a couple of weeks, 3 weeks maybe, of some kind of downside correction that is aligning with oil. Overall, longer term picture is better, a lot better than it had been, with this chart using up most of its time rallying. You could see that. So that's this formation here that says not bad on the intermediate term, just a correction due on the downside. Here is heating oil, and this one will give you a similar look. This one has been weaker. You can see as the amount of decline it's had has been steeper than we've seen in either oil or gasoline. And again, a couple of weeks potential here on the downside, and then turning up again. So we have like a window of time that we're looking at that is kind of narrow for decline here in the energy markets. Natural gas, here's the natural gas chart. We'll put that up, and let's just look a little bit closer here at these last couple of cycles. We're in this green area, which is certainly a positive area. Tried to sell off and then started to bounce back. So that's an area where we expect a rally. Now there's an inverted head and shoulders forming that you can see. Left shoulder, head, and right shoulder. And the breakout area would be, we'll call it over this 308 to 310 area right there. So that would be the neckline. It'll have to get above there to turn really, really positive. Patterns do suggest, though, that that could happen. I'm going to look here at the daily chart. We're just going to have it blown out to 2 years, so we're going to come in right here. And you can see that this pattern, not bad, in that we got into this rising part of the cycle right there. Gave us a nice rally. This was kind of a tough one to read in that the sell-off in here was pretty small. Let's even get a closer look. And so the sell-off in here was hardly readable, but the bottom came right on time. And now where are we? Well, we're entering into a little corrective period. That's this right here. So if I were to complete these, we'll call them cycle envelopes, it kind of looks like this right over here. You can see that. But then when you get into this section, it's another rally. So that calls for, we'll call it, like around 4 or 5 days of potential correction in here, but then moving on the upside again. This sets up maybe the best trade in here right now, waiting for the long side in natural gas, and then looking for potential buy spot here. We'll call it 3-4 days away. So that pattern natural gas and little evening star that's forming, so that could get you some nice looking decline. Next thing we're going to move into here is foreign exchange. Last week we talked about the dollar due for a small rebound. That rebound came, but that sure couldn't hold very much, and we talked about how bad of a pattern the dollar was in, and it is still quite a negative pattern that we're seeing in there in the dollar index. So we're going to switch over to DX, and then we'll look at the euro, British pound, Japanese yen, Aussie dollar, and the Canadian dollar. So we're going to get the DX put up on the charts here. And now we get that over, and DX is the dollar index, left side weekly, right side daily. And here you can see that big red zone, a very, very key, that number 8 that we saw right over here. That number 8 signaled to us that this rally had ended and moved into a new cycle as it broke down in the 8th week. That puts a lot of time of decline out here, and you could see how this rally failed as it started to move down. There are a lot of dollar bulls out there, and when I look at these charts, I really don't see it. The thoughts are that, well, the interest rates are going to go up. And of course, Janet Yellen today made some comments about the fact that they're going to try to manage that increase in interest rates properly, and they're very data dependent. So if interest rates go up, they figure that it's good for the dollar. Problem is that when the interest rates go up, then the rest of the world's interest rates are going up also. And you got to figure out, well, which one of them is going to go up faster. And in this case, the dollar had done so well for so long. Now you got to think that there's a lot of movement out of the dollar and out of these carry trades. And that, you can see here, could put a lot of pressure on the dollar and even on the markets. Well, the Treasury market is way, way ahead of it on the downside right now, and this dollar has got a lot of risk in there. So we'll take a look at the daily chart in the dollar, and here's let's just look at these last 2 cycles. We were looking for the rally in here this week. So you can see these 2 moves up here, right up into the resistance. We got the rally, but then it broke down, and now it's got like a week and a half of potential downside risk again. Bad day for the dollar today on FOMC day, and that is not a very good pattern when we look at it. We're going to blow this back up, and we're going to switch over to these other currencies. Here is the euro currency, and it's in an area where it's got a little more room it can move up. Resistance comes in around, let's call it 114.50 to 115. Then we're going to get into a little corrective area. So we just said the dollar down potentially for a week and a half. We'll call this up potentially for a week and a half, and then roll over and get this correction right there. Then we get into a positive period again, and that speaks to the kind of bad condition that we have here in the dollar index. Take a look here at the daily chart, And you can see that we had this triangular breakout today as the dollar moved down. Cycle says that, well, maybe we'll get a little more upside, have a little correction, and then up again. So this euro pattern, as you can see, I have drawn getting up to about that 115 number in a couple of weeks. That's the way that cycle projects, those dotted lines. Putting that on a lot of my charts now, because we'll have that product available where you'll be able to get all my charts on your TOS platform. And I think that you'll find that as a great tool as you look for your particular trades or option trades to have all of the cycle projections and support resistance areas put in there for you. So that is the euro currency that we're looking at. Here's the British pound. It has been a monster on the upside. Look at this, move back up to that resistance area, remained in this green zone, and now we're going to look for, we'll just call it another week or so on the upside, and then roll over to its corrective period also. So here's the week, maybe up here, get this correction right into this area. You can see these timing spikes here say that's where it's likely to decline into timing wise, and then after that up again. So everything here, these what we're looking at in the euro and the British pound, all speaks to the fact that the dollar looks like it's in a lot of trouble as these patterns continue to look good in the euro and the British pound. Here's the Japanese yen talking about a lot of trouble. We saw the breakdown when it came in here, said it was entering to this red zone, moved to the downside. It still has, we'll call it 3-4 weeks in here, so I don't expect any rally in the yen to hold up at all. Take a look at the weekly in the Aussie, /6A, and that is not a good pattern as it has rolled over and threatened those lows these last few weeks. Now you're still above that low, that's still okay, and you're likely to get a rally out of here. So we're going to look for it to get somewhere up into this resistance area again, a little pop, but then probably roll over again. So overall, I don't like the Aussie dollar when we look at that. When we look at the Canadian dollar, /6C, pretty similar pattern, but better. You see, it didn't threaten that low as far. Still, it has this resistance in the same similar area that we looked at in the Aussie dollar. Both of them are resource-based, and that has them being on the weak side, while gold continues to just be sluggish at this point. Oil continuing to be sluggish, so that's going to affect these currencies. So that is a look at the currency markets. We're going to jump now into the metals: gold, silver, platinum, and copper. We'll call these frustrating at the moment, really stuck in a range. As a matter of fact, platinum, which we talked about last week as being quite negative, thought it could even get a bounce, but man, it really got hit. And copper last week we talked about, it was in the ending period of a decline. Well, ending periods of declines can get you some pretty steep downside moves, and that's really what we saw go on in copper this week. So we're going to come back to these charts. We're going to switch over to the gold chart, get that loaded up here for you, and then we'll bring over gold. So here is the chart in gold. You can see the range on the bottom that it has been stuck in. There is a pattern in here that has suggested that it's going to move up, joining this big pattern right here. That would be a time period you could get an upside explosion. So you could see the first cycle in here and then the second one right in here. Well, when the second one took hold, it had a big move. That's where we are right now. Not turning green yet because we're not getting the upside confirmation. And we'll take a little closer look here, and you can see the range it's developed. A bad number would be under 1141. A good number, we'll call it a really good number, would be getting over that 1232 area. So that's what the range looks like, and you can see we're stuck dead center in it, and it's not telling us anything. I've gotten lots of emails on gold, and I'm telling you, everybody's frustrated in that one. Here's the short-term pattern. Look how pretty these cycles are laying out. Just absolutely beautiful. Now, I actually projected in all of the shorter cycle patterns also. So here is, look at these patterns right in here. That's this and this. You could see that. So each of those made up of two smaller patterns. So it's this right in here, and the same thing for these. Now let me get a closer look so you can see the ones that I've drawn in here and how they project. So right now we're in this area right over here. Now what I highlighted were these are kind of similar areas and similar patterns. You can see how much of this area in the yellow and this area in the yellow look alike. And what happened was that as soon as you broke out above this level, it got a spike. So right now we're still in, and you can see the resistance number right over there. That's about 1188, we'll call it. Right now this pattern suggests, we'll call it another week of playing around in here and then moving up. But if it gets over that 1188, 1190 number, look for an upside spike. Everything we're looking at here is really positive. So while gold has been sluggish, that looks like a positive pattern to me. So I'm looking for, maybe a little bit more time of being sluggish here in gold in this range, but then after that we're going to look for some better prices on the upside. I sure hope that 1152 doesn't wreck this whole analysis. Here's the silver on the weekly chart. Looks very, very similar. Should be turning up again and moving up again pretty soon. I'm long silver. Just I would call it a little tiny little bit concerned that it's not getting ready to move up yet, but I think that is coming. So here we'll take a look at this pattern right in here. This is this is what bothers me. This is a bear flag that's forming in here. The odds are 2-to-1 in favor of the fact that it will continue on the downside. And if it does, you could see this cycle right here that says, well, that's about a week and a half out. So there's risk in here. Now, if it can get out of this flag and move out above 1645, that'll be a whole different picture. But right now I'm going to call small downside risk for the near term. Just like we looked at gold, it looked like it had another week or so it could play around. And then after that, getting ready to turn up. So we'll call it a little bit of risk at the moment in the silver market. We're going to go back to the weekly chart and blow that up, and you'll see what silver looks like, because I want you to get this image of how it's moved sideways here well above that 1415 low that it made back some months ago in last October. But now take a look at the platinum pattern when you look at this, and you can see how it's just plain broken down. Now we're at we've talked about it being bearish for all these months, and it continues and made a new low this week. Now we're at the point where this should be turning up and making this bottom and getting at least a rally up to, we'll call it 1170, 1180 sometime in the next couple of months. So that aligns with what we're looking at in the gold market and silver market. Bottoms due and likely to get rallies, but copper really weak. What does it mean about the economy when when platinum is this weak, and copper, when we look at it, has also been weak? Let's take a look at this copper chart right here and get this to blow up. This is the declining period that we were looking at and said, okay, there's risk in here. We're looking like it's going to go down in where these cycles are synchronized on the downside. That's cycles in phase and correction. Timing wise, you see these two blue marks up here. Those are timing spikes, and they suggest that in this period of weakness, an important low is going to be made. So I'm actually looking for, I'll just envelope these out for you, at this kind of that doesn't even look like I wanted to draw that at all, does it? Let's redraw that. Where it's kind of in this kind of a pattern right in here, but then you get right here, and that's likely to give you this lift right there and get us over $3 potentially in copper. So copper looking much better than platinum, but still a little bit of concern when you look at these metals markets, the industrial metals like copper and platinum, and silver's in that category also, and they've been this weak or this sluggish. Got to wonder about this Fed and the raising of interest rates when you have an economy that's, we'll call it barely growing. They've downgraded that to 1.9%, and these metals markets kind of reflecting that. So I wonder where the fire is going to come to move gold on the upside. But patterns suggest we're going to make a bottom in here and get some kind of a decent move. So the next thing that we're going to look at, we're going to jump into the Treasury market. We're going to want to look at Treasury, stock index futures, and grains coming up. We're going to start with the 5-year, and I want to look at the 5-year as I did last week, looking at it on a 10-year weekly chart, so you can see the long cyclical action that has been really outstanding. Here is that 5-year chart, and there is a great cyclicality in here that you're going to see when I point out these important lows. So look at here at this important low, how that came at that cycle trough area right there and there. Now let me point this one right down over here. Just this one a little, oh, that's not it. Sorry about that. It's actually this one right over here is the one that lined up there, and then this one here, and then the important low that was made right here. So beautiful cyclicality there as these slings line up. Let's just look at these last couple right here, and we got this rally. I want to come out a little bit, and then a major breakdown. So as we got this rally right here, and it came down and took out this low, that says lots and lots of trouble for these Treasury markets. And here I have the projection of this cycle in here. What does that point to? Well, it points to this smaller rising phase giving us a rally. You can see that started to happen right over there as we've had this uptick in the 5-year, and that calls for, we'll call it a few weeks on the upside. Then they're going to take over again sometime around mid-July or so on the downside. So we're in a period of potential small rise there when we look at the 5-year. Now we'll jump over to the 10-year, and that same cyclical alignment is there, and the beautiful breakdown. You see that number 24. We've had a consistent cyclical period of 24 to 28. This one was 28 here, 24, 24, 25, way back over here. So look at the beautiful rhythms. Where are we now? We made a 4-week high. I mean, it really doesn't get much bearish than that. Came and broke down right over here, and now we have, well, a bear market in place. And that bear market goes out to, well, we can pick, have this tell us how far out does that big cycle go. It's supposed to highlight and pop up. There it is. That goes out to February 28th of 2016. That says how long it's likely that we're going to be in this, at least this leg of the bear market in the Treasury market. That is a bad picture, and it suggests maybe that rates are going to go up for a longer period of time and higher than anybody thinks out there. This is the market leading the Fed. The Fed has gone nowhere yet, and the market is starting to anticipate that big break. That's what happens. The Fed does not lead. The Fed lags these markets, and that's what we're seeing in there. So now we'll go back to the chart in here on the daily, and you could see the big head and shoulders that's formed, and another little head and shoulders that made the right shoulder. Pretty cool, huh? This is the big head and shoulders top, and it is broken down very, very nicely. And now we're in this shorter term pattern. Let's just look right in here, and you can see I have these cyclical patterns drawn in, and what that suggests is that we've got a little bit more rally into this red zone right over here, then probably rolling over and getting another little rally in here. So where I showed you on the 5-year, that period it was turning up, that's what we have right in here, is this little bit of a few weeks that is likely to get us some bouncing strength in these treasuries, but then after that the decline will take over again on the downside. We're going to call the resistance in here between, on the 10-year, between 126.06 and 126.19. That's the resistance area, likely to trade up into that area and then roll over and then try to do it again. So that's what we're looking at now in the 10-year, is in a period of a little bit of a rally, but living in this bounce right there. I came back so you could see this little cycle pushing up, and that's this one right in here. That won't last more than a couple of weeks because this is pushing down and this big one is actually pushing down also. So any rally in here into that resistance area is likely to give you a big failure. We're going to look for only modest bounces here in these treasury markets and then down again. So that's a look at that chart. We'll show you the daily chart in the 30-year also, and you will get a sense for how that lines up similarly. Let's go over to the 30-year, which was down pretty good today, 28 ticks. And here is that same pattern on the 30-year on the daily, where we're in this rally, likely to give us a bit of a decline over here, and then one more rally out over here before this takes over again on the downside. So we're looking for choppy range, a little bit better for the next few weeks in the treasury market, and then giving us a pretty good leg on the downside again after that. So really what we looked here is in the treasuries is that this modest rebound, as we talked about last week, came. We're in it right now, and it's likely not to get real far, and just in a few weeks likely to start to move on the downside again. So let's now talk about the stock market. The stock market tried to get a rally today. It was down 9 points, the S&P early. Typically what happens for some reason on these FOMC days is that we get a rally after the announcement. We moved up about 9 points, so 18-point rally in the S&P, and then they moved down, and the S&P cash closed a little on the cheap side today, but around unchanged on the day. The market to me looks like it's got some risk here on the near term, but after that I'm not thinking that there is a lot of risk for the stock market past, we'll call it the next 4 to 6 days, and then I'm going to show you why. Interesting, and when I start to bring up the membership site and people start to look at things I put up like market sectors and trends in stocks, we have a big alignment of a lot of important stocks making very important lows in the next couple of weeks. That's setting up for another stock market rally. Now, I've looked for a major correction in here, and out again, and probably in the next month, I'll be putting out something on a big picture of the stock market. My view on it has changed a little bit, pushing out where I think the big decline in the stock market is, and zeroing in on an important low that happened last October that I think gives me a little better handle on the bigger picture of the market and why it's been so strong and not wanting to give up a lot of ground. Well, based on what I'm looking at now, and especially these alignments in the weekly patterns on major stocks, we're looking at just a small correction in here, and then potentially another new leg to another new high in the stock market. So we're going to look at these indexes, and those stock charts we'll be sharing along the way further out there, especially for people that will be signing up for our membership. Again, we're about 2 to 3 weeks away from starting that membership, firming up a lot of things that we've been working on, and so we're getting close, so that'll be exciting. So we're going to switch over now, looking at the stock index futures. Now, I look at the cash, and I do a lot of my work on the cash. I've had some people ask, well, you look at so many futures, why do you put so much into the cash indexes for the stock market? Well, there's often big discounts when the rolls come, and the cash indexes are pretty much true, where because of the rolls and the big discounts in the futures, the numbers don't come out quite right. So I like to do all my work on the cash indexes as far as the stock market goes. So those of you that do subscribe to my charts, you won't see the work on ES or on NQ. You're going to see it on SPX and NDX. Let's take a look at the weekly chart in the SPX, and we'll take a look at that big picture that I was talking about and that important low that came last October. That's really what I want to focus on first here. Here is the chart, and you can see that really important low that came last October, that 21-week low that's marked off. And ever since that point, we've been in this major upside move. I got to tell you that I missed that, believing that the when they started to roll over, that there was the alignment was a little different, and I thought there was going to be a big decline out into this area to complete it. Now I don't, I missed that, and I think that we're going to see another move on the upside to another new high before we end up making what I think is going to be a major top in just we'll call it a short period out there, a matter of months. In the meantime, we're looking at this important support area. This is the 34-week moving average and an importance Fibonacci number. This lays out to between 2068 and 2072. I wouldn't be surprised to see that tested again, and then another attempted rally in here in the stock market beginning pretty soon. I want to show you the shorter term in here in the stock market. This is just a great alignment of cyclical patterns that are running between 10 and 12 days, mostly in the 12-day area. You can see all of those important lows. That's these smaller patterns in here, and there's a Russell pattern that's calling for a downside correction right here, aligning with that S&P pattern. Now you can see that 10. What's really important is that this low and this rally only make a total of 6 days. That points to this decline coming right here. And I think we're going to get back into this support zone or a little bit lower than that in this period, setting up what will be this rally period. And that aligns with all of these stocks that I'm talking about. Man, the financials are looking powerful. There are so many stocks that were making bottoms in this period. It just says we're going to get another lift like that once this is over with. So I just want to pay attention to these shorter term patterns that are really speaking right now and say we're in for some pretty good risk here for the next week and week and a half. And then after that, it looks to me like the market is going to be in decent shape. So that's a look at the S&P 500. The NASDAQ NDX has got a similar pattern right here. Come on up there. And you can see that 10-day right there. So we're 6 days off the low. You can see this pattern right in here that says a more decline coming right in there. And you can see I've got it kind of drawn in there. You also have a let me look out a little further here, and you can see a head and shoulders top that's formed in here. So NASDAQ has not been anywhere near as strong as the Russell. I'm wondering if this isn't going to get some sort of a sharp sell-off here in this next week based on this pattern we're looking at. But again, I think it's going to be okay after that. The Russell just plain out the monster strong one. As we look here, you can see it's had a much better time of it. There's that Russell pattern I showed you on the S&P 500 that looks like a decline here. Here's all the strength. It actually made a new high today. Can you imagine that? And so getting into this corrective period, just like the rest of them, this next week and a half in the stock market looks to me like it's got risk. But then after that, I don't want to be short. So we'll see how this sets up. If that sets up properly and we get the decline as I expect in this next week, to me that's going to be a buying opportunity in a lot of stocks if that does set up the way I believe it is. So that is a look at the stock market. Next thing we're going to take a quick look at is the grain markets. We're going to switch this over to the ZC. I'm going to come back from the 10-year to the 2-year chart on the weekly. And we were looking for bottoms to form in the grains in this next week. I had believed that they all bottomed. The beans were not showing it yet, and they actually are now looking better than any of them. Bottom due in here. We don't have a real sign in corn of a bottom yet, but I think that's coming. The wheat market / ZW, that's looking like the bottom right there. You can see on the weekly that engulfing pattern that occurred right here, and that sets up to me a buy in wheat right now. Let's take a look at the daily in wheat and see if it's giving us any sign in here at all. Well, there's an inverted head and shoulders forming, and there's these inverted doji and inverted hammer. That could be a good sign. Often when you get that, it turns up. I don't like that the slim ribbon turned red right there, but some sign of a rally potentially in here in wheat. as we look at that. Let's get back to the weekly chart on wheat and take a look at this bean chart. Man, it took off. And so there's what looks like a bottom forming right on time there. And resistance in soybeans are around, let's say, 990. They're 966 right now. I think we're going to get up to that 990 level. You can see how we've gotten right now right up to this resistance, the 89-day moving average. And if it gets through there, it probably blasts off. You can see the two big up days here. And just as corn turned negative, this is turning positive. And you haven't had a positive read in momentum in beans for several months. Here's that 89-day moving average, and you can see it is key right there, an important level in the bean market. The last thing that we're going to look at is oats, and we'll put up /ZO, and that's the oat market. If we get that correct, /ZO. And the oat market has been stronger. You can see it looks like a bottom formed in there. These two little blue spikes are the areas that bottoms are due, and we're starting to see, oats turned up. We're starting to see soybeans turn up. So I do think that we are looking at a better grain market here, and that is the oh man, we're I got to get this. We've got to get better practiced at using those slides. Anyway, that's the end of this particular segment. We're going to again have our site up in the next few weeks, and everybody will be able to get the sign up and get the membership videos that I think you're really going to enjoy. There's tech tools, the old tech tools, now called tools for techs, and trading psychology. Those are going to be really, really valuable. And we're working on a show on Friday, which is going to include, a look at the previous week and a look at the week forward, and some other great stuff sandwiched in the middle. So lots of great stuff coming up, and I think that you will enjoy what we have to bring. That includes some workshops that we're working on, especially on cycle analysis and the 5 essential building blocks to successful trading. So lots of good stuff coming up, and thanks for watching. And again, we'll have another one of these next Wednesday, and that'll be free for everybody, and probably the next few weeks until we get everything set up. So thanks for watching. See you soon.